Hello guys, and welcome once again to my YouTube channel. So remember, I'm about to reveal to you something that is profound, and the strategies that we have been using for a long time now, and that we'll be using obviously in 2024, the entire year basically. It's a strategy that we have realized that over time it's very, very effective. There is no strategy out there that can be compared to it based on the level of consistency and the little to no manipulation that it experiences from market makers or from the institutions, because it is the institutions themselves who are actually the founders of the strategy. So I want you to pay attention as much as possible, because the next 30 minutes I'll try by all means to be fast to make sure that I don't make the video longer than 30 minutes. But in this short space of time, I hope you're going to gain so much value that you're actually going to utilize in the next year, which is 2024. So this is the way we trade, and this is the way we look at the markets. So if you're not in our free Telegram group, the link is in my bio, in my description below there. You'll find the link to my free Telegram group as well as my free WhatsApp group there. They will be sharing powerful free signals as well in 2024, as well as we'll be doing live TikTok sessions, and also the link to the live TikTok, the link to the TikTok account, I think it's also there in the description. So make sure that you're part of our community, and we'll also have a Discord link as well in the description. It's there as well. Join us there. Make sure that you're part of a people who know what they're saying, and people who are ahead of time in terms of understanding and comprehension of what is happening on the market. So without wasting much time, let me just, so this is gold. As you know, when you are analyzing, you always start from the monthly time frame. You've all heard about these trend lines, what is supporting the research. That is limited knowledge. If you are to ask me, if you are to ask me why is it that every time that I'm always doing a video, uh I don't make my trading decisions based on trend lines. If you have noticed, I don't just come and start to draw trend lines, then say buy here, sell here because of trend line. No, because trend lines, support and resistance, all of the retail knowledge that you know, all of the retail concept that you know, all of those, they fall under limited knowledge. Well, limited knowledge is knowledge that can be manipulated, is knowledge that can be corrupted at the end of the day. That's why you see, even after breaking your trend lines, for example, like this, they came here, touch, they broke your trend line. Most of your people, most of your guys, they thought that market is now dropping, yet the market was still, it kept on going up, touched, went back above the trend line, did all sorts of things there. Because if ever all you know is trend lines, if ever all you know is trend lines, 2024 is going to be something else for you, because you will make money today, you lose money tomorrow, you make money today, lose money tomorrow, simply because there is manipulation that is happening each and every single day, each and every single week, each and every single month towards retail knowledge and people with understanding of retail concepts only. So without wasting much time, so here, as you can see, what happened, I just want to describe what happened. So what happened was the market was in bullish order flow, created that high, then came and created this higher low, broke structure up. So basically, you realize that after this major break of structure, which is a major institutional move, right? After this major break of structure like this, that's a major institutional move, right? What we are now anticipating from where the market is, we are now anticipating a major reversal before a major continuation up, right? So where can our major reversal be? We have this zone, we have a fair value gap and an order block down there. We also have an order block right here. So those are the two major levels. Why those two major levels as well? Another powerful point as well is, after every major institutional move, like a major break of structure like that, the market will always come back and collect an inducement before they proceed, right? So this is the last leg of this monthly time frame. So meaning, if they are going to continue buying, they have to come and wipe this inducement, tap into a zone, whether it's this one or this one, then they continue going up like this. So you realize that 2024, I'm basically anticipating this movement to happen. This major movement is what I'm actually anticipating the entire 2024. So now the most important thing, once you have done like this, so you realize that even here, let me just show you what I'm saying, that even here, this was in December 2015. This was in 2015 right here when the market came here to this zone. So after coming to this zone like this, all you need when it comes to, because this is a pullback, this was a pullback of this push. They pushed here. This was a pullback. So after every pullback, you know that they're going to continue back to the previous leg. So once you get the gist about this strategy is once the market shifts order flow down here, once it shifts order flow down here, it means they've ended their pullback. Once you now get your entries from down there, it means you can even hold them as far as that major breakout structure. You realize that if I go lower to the daily or even to the weekly first, let me go to the weekly first. So if I go down to the weekly first like this, on the weekly, so all you are looking for is where the order flow changed, where the order flow changed from bearish to bullish. You realize that it's actually clear where it changed, because as they were coming down, they were actually, this was, that was an inducement up there, inducement there. They broke structure here. That was a breakout structure here, right? They induced again here. Then they broke structure here. So you notice after every break of structure, which is an institutional move, they are coming to collect an inducement, which is the same movement that we're anticipating on a monthly perspective, which means it's going to hold for a very, very long time, that movement. So after that, then they came and changed character here. So this change of character, this major change of character, it was the one that signified that we are now going up. This means that we are now going up, number one. Number two, it also means that the pullback that was happening on a larger time frame perspective, it has ended. That's what that change of character meant there. So meaning all the opportunities, the buying opportunities that you could have gotten here, entries that you could have gotten here, you could have even held all the way. Institutions, that's how they basically trade. In the big banks, what they do, that's why you notice here it was around January 2016. Then up there when they broke structure, it was in 2020. It's like almost 4 years of the market pushing in one order flow. The market was pushing in a bullish order flow for 4 good years. So even if I go down to the daily, you see the same thing. The only difference now is that other time frames, remember, the difference on time frames is just that what happens on a weekly time frame, it takes longer on a lower time frame to happen. That's just the difference there. So after the change of character, which is this one, that's the major change of character, right? That's our major change of character right there. That's our major change of character right there. So after that major change of character up there, after that major change of, so you realize that before that major change of character happened on the weekly, this is the real gist now. This is the weekly change of character. You realize that before they even got to the weekly change of character, on the daily, they actually did their change of character down here. After this inducement, they came and broke structure here. After breaking structure here, then they came and changed character here. You see? That's just the difference in time frame. This is what we call the practicality of the market. The practicality of the market. The practicality of the market is whereby what happens on a higher time frame is the same thing that is happening on a lower time frame, but the issue is just in different times. So you realize the daily changed character there, then you would have just waited for this weekly to change character as well. Then they came all the way giving us this major pullback. So that major pullback, first point, or the first way you could have entered that entry was so simple. You could have entered it based on a simple understanding, which is an understanding of our Fibonacci, point A to point B up there, right? So that was the first way you could have entered, right? You can see even on the weekly. Let me go back to the weekly so that you see where they induced. On the weekly, this is their inducement. So meaning before they go up there to come and collect this, they to come and take out this inducement. So meaning even on the daily, when you go down to daily 4 hour, 1 hour, they have to come and take out that level. So meaning all the selling opportunities that you could have even gotten on a smaller time frame perspective, let's say the 4 hour, the 1 hour, all the opportunities that you could have gotten from the top there, you could have even gotten them and held all the way to this. That's how you can even enter that counter trade to the downside, right? So that was it there. That was it there. Let me see if I can show you how you could have even. So right here, you can see they changed to there. After they changed to there, they came back to the order block Then they went on to break structure. They came back again to the. So all those were entries that one could have entered all the way there. You could have entered this. This was the first major entry there. So your first major target is always the adjustment, which is this one, which is the weekly adjustment, right? Because you are targeting them to come and take that out before they proceed. This is a lot of money just from here. This was from 5 September 2016 up until November, September, October, November, almost 3 months of holding. Imagine almost 3 months of the market pushing in one direction. This is a lot of money just from here to there, right? So after they take out that adjustment, all we now want to see, all we now want to see now, all we now want to see, if you go to the daily, you realize that we want, because we want to refine this major level, right? This is a monthly zone, but we want to refine it to our daily so that we identify a perfect entry. Right here, this was the first zone. They came, they mitigated that demand there. They came back again there, they mitigated again. So most of these, they were mitigated. Even here, they had mitigated, meaning the probability of them coming back all the way there to the mitigated levels was very low. So let me proceed after this one. After this mini break there, they also had this one. So this was most probably our major last demand that was not tapped according to the daily, which was a good one, because now once we get this entry, we are going to hold it all the way to the upside, because remember, we are now in a bullish order flow because of this major change of character. So most people, what they don't really understand, they haven't mastered the art of maximizing. Once you master the art of maximizing, like using this methodology that I'm using here, once you master the art of maximizing, you will make a lot of money on the markets that people will think that you are doing something else besides trading. So here, after they tapped into the zone, the most important thing is you go down to your lower time frames, 4 hour, 1 hour, lower there. Once you see a shift there, once you see a shift, then you enter those buys, you hold all the way to that leg up there, right? So that here on the 4 hour, if I go to the 4 hour, it's not showing me this detail of from 2016. Let me see if it's showing me 2016. Can it go that further? Can it go that further? It's not going that further to 2016 on the 4 hour. Let me see. Let me see. Let me see. This is 2019. Uh this is you see, it's not giving me that information on the, it's only, yeah, so it's not giving me that. So which is fine, but the methodology and the idea is still the same. It hasn't changed. So basically, that is how you're supposed to approach it from there, right? All you do, you just go to a lower time frame. Once they tap into a major zone, that was the major zone that they tapped into a major zone. All you now do is you go down to your lower time frames. Once you identify a shift in order flow there on your lower time frames, then you enter that buy. The major target, the major target is up there, right? That's the major target. So inside here, you can actually see that they, because they were, as they were coming down, remember that as they were coming down, they were coming down in form of bearish order flow. As they were coming down like this, coming down, they're coming down in form of bearish order flow. So that's why you see, even as they take out this, that would be their change of character to the upside. This change of character is simply to tell you that our pullback has ended. We're now going up. That is simply what that is saying. So they came back and pulled back all the way into a major demand, which you could have also saw, meaning the first buys, you could have caught them here, target up there. Second buys, you could have also caught them here, target up there. You see? So all the way from December 2016 up until 2019, the market was pushing in one. This was mostly bullish. In here, let me show you now the real gist now. The real gist is inside here, when you follow this inside structure, you also get other opportunities. You also get other opportunities like after they take out every adjustment like this, they'll always come back to tap a level, then they proceed and break structure. So this is now inside structure. And based on your understanding of inside structure, they will follow this inside structure. They can follow this inside structure up until they get to the top there. So here you could have bought, here you could have bought. Same here after breaking this structure, where was their adjustment? After breaking this structure, their inducement was here. They came back up, then they tapped into the zone. You would have bought again there. All these were buying opportunities that I'm showing you. They broke structure there. After breaking that structure, they did the same thing. They induced here. After they induced, then they tapped into a level, tapped into a key demand there. All you do, you could have gone to lower time frames, you could have gotten that entry nicely. Then they reached the so all the way from down here, you can see that they were buying, buying. Meaning, once you get your after getting your lower time frame entry from here, you would have held and held and held and held up until, because order flow was still bullish this entire time. Order flow was still bullish. Then they came here, it was still bullish. It was just a small level nearer the major TP. Then from there, they came all the way down. Coming all the way down, people now they're confused now, because remember, where is our which one is our swing leg? This one is our swing leg, and this one is our swing leg. That's our swing high, that's our swing low, right? As you can see, the market is in bullish order flow, right? We're in bullish order flow. So meaning whatever happens in between here, it's internal structure. And that internal structure, so this is still our swing legs. People now, when the market does something like this, for example, here it came and changed this character right here. This was just an internal, it's called an internal institutional movement that was there to collect this liquidity that they were generating by this order flow. That is one of the ways in which the institutions are going to tweak their strategy in 2024. People are not aware of this, but I'm just telling you, it's just a hint of one of the ways in which institutions are going to tweak their methodology and their way of looking at the markets and their way of trading the markets in 2024. This is one of the ways whereby they'll introduce a new movement. They can introduce two order flows in one major structure. For example, the major structure here is bullish, right? But they can actually introduce two major cycles: the bullish and the bearish, then the bullish, like this. So whilst they are doing that, they haven't changed anything. This market is still bullish overall, right? So this, we could have given you the buys. Same thing, even the drop could have even given you those sells. Obviously targeting a major zone. They tapped into a major zone. After tapping into a major zone, all you need is a change of character there. They changed character here. After changing this character, it meant that we have ended our pullback. So they were actually considering this as a pullback. After this, you know that they've ended by that change of character. After they tap into the change of character there, they tapped here, then they came and tapped into this demand right there. That's where you could have also entered your buys right there. You go there, you go to a lower time frame, go to your 4 hour, 1 hour. You're just going there to identify a more smaller stop loss. That's what you're simply going there for. Your analysis and everything, you've done it here on the. So even let me just show you even this sell, how you could have caught the sell. Because remember, I showed you how you could have caught this buys all and all going to the upside. So even the sell, you can see that the 4 hour, the sell as they were going up on the 4 hour, right? On the 4 hour, as they were going up in form of bullish order flow. Then they actually did a change. We had this first leg right there. They went up, failed to create a higher high, which was the first sign. So meaning, even here, you would have sold. You selling there, them coming back to take out this. So even if you missed this sell, you're also going to enter even after this one. So after that one, they came back to the supply zone up there. Those were major sells that you could have actually entered on gold here. And all these are swing sells. Swing sells that you can even hold for a very long time. Sometimes you can even hold them for days, sometimes weeks. Right there, that was also another entry. You could have just waited for the market to come back inside the zone. Then you enter your trade right there, like this, just like this, right? They kept going on and on. So as they will be going, you can even maximize. You can maximize by following order flow. following order flow, following order flow, following order flow. If you follow order flow, you realize that where order flow is going to change, that's where you were supposed to also now change your bias from bearish to bullish. So right there, that's where they actually changed. So here, this was the daily zone. This is the daily zone after the change of character right there. So after that change of character, that is the daily zone. So all we need, it means we now need a refined level on the H4. It was this fair value gap. It was within that daily level. So meaning right straight here on the zone, you could have entered stop loss below there. Then you could have held to this leg, but someone who is wiser now, a wiser person could have even held this trade all the way now, all the way to that level, which is the major breakout structure up there. There. So you could have entered there. How you maximize now is when you enter here. That was in November 2018. You can even follow structure. You can even follow structure until they come all the way to the breakout structure there. It was almost months and months of holding. It's very possible. That is called positional trading to 2019 June. Months and months and months and months and months of holding. And this sell that you entered there, you would have even held it all the way up until order flow changed. And order flow changed around that daily demand that you saw. So meaning you would have held this sell like that, then this buy would have also held it like that, all the way like that. So the most important thing is always to go back to our higher time frame and look at our structure. So when you zoom out now, when you zoom out like this, or looking on the broader perspective, you realize that even this buy that you entered here, because the market, once it has changed and it's now in this bullish order flow, is because remember, externally they are bullish and internal on the daily now they are also bullish. So even this buy, according to the institutional way of looking at things, it was supposed to be held all the way up there to up there. So during this entire time, your focus, just during from November 2018 up until July 2020, your focus was simply scaling in on buying opportunities. Scaling in on buying opportunities. You're simply looking for buying setups. That's the the most powerful thing about. So after this breakout structure, you look for the next structure. Look for the next structure. In this case, all you need is to see an adjustment, something like this. Once you see an adjustment, right, you identify a level, then you enter on the level, you go to a lower time frame. Once you go to a lower time frame, you see the market structure shift. Once you see the market structure, so here, adjustment, they tapped into a level, you could have gone to a lower time frame, 4 hour, 1 hour, your lower time frames, all of those ones. After you could have entered the other entry buys here. So imagine for an entire 2 years, focusing on identifying bullish order flow setups because the market is bullish. This is 4 hour. They tapped into the zone. That was the zone there. I'm just showing you you how you how you go to lower time frames to confirm those entries. So this was the change of character. After the change of character there, they came back to the demand. There on the demand, you would have actually entered your buys stop loss below the zone right here. So even if you want a shorter TP, it's okay. It means your shorter TP in this case, it will be up there. Still, even if it's there, this is a lot of money because it's from 28 November 2019 to January. It's almost like 2 months of holding one position. 2 good months of holding one position. Just in case you don't want to hold for a very, 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 very long time, this is also how you can maximize. Very simple like that. This was how you could have entered there. You go back to the daily because that's where your main structure and your main analysis is. Most of you, the reason why you are getting confused each and every single time is because remember, we're in bullish order flow and it will maintain that bullish order flow up until they break that major structure up there. They changed here from bearish to bullish. They're now bullish. So meaning my higher high is this one. My higher low is this one. They have to maintain that bullish order flow. Meaning, even if the market comes back to a higher low like what it did here, that was a sniper entry opportunity where you could have even entered aggressively right here. This you could have even entered aggressively, even if you go down to lower time frames, 4 hour, 1 hour, 30 minutes, whatever you want to go. Once the market taps into the zone, you can go to your lower time frame there. Once you go to your lower time frame, you enter. You enter. You enter the entry. The humble TP was this one. The first humble TP was this one, which was a swing trade, but the best one was all the way up there. So even if you went down to 4 hour, 1 hour, you could have gotten the entry nicely from there. Let me go down to 1 hour so that you see. 1 hour is gonna give me that. This is something that your mentors would discover after years, decades, most of them. They'll take the next 5 years of their career to discover some of these mysteries. They might try to implement it, but the understanding now, it won't be the same. It won't be the same. Trust me, the understanding won't be the same. That was the zone. It tapping into the zone that was the extremist zone there. That was the extreme zone there. It tapping like that, rejecting. You could have even entered there, right there. So even after establishing this internal change of character, coming back, that was also another opportunity again. So that is how you were supposed to maximize. This was a humble TP. Major target is up there. They kept on going and going and going and going and going and going and going. So you just follow, you realize that they kept on going. So here, after breaking the major structure up there now. So remember, as I said, that all the buys, major buys that you took from down here, I showed you the buys that you could have entered here on this higher low there. The major target, according to the institutions, according to their books, they actually know that from January 2016 up until July 2020, we were following bullish internal order flow, right? Obviously, external order flow is bullish, but we were trading that internal bullish order flow. We were bullish the entire time, meaning we were buying gold the entire time. They bought, and held all the way up until there. So after they do this major break of structure, the same thing that you were experiencing at an internal level, whereby after every change of character, they come back and take out the inducement, tap into a zone that they've go, break structure. After the break structure, they tap in inducement, break structure, tap in inducement, tap a level, then they go. It's the same thing now that they will do at a higher time frame perspective. So looking on the monthly like this is our previous internal higher low, right? According to the monthly, this is the way the inducement is gonna be at. Meaning, if they are going to proceed buying, because they've done after finishing this major institutional move, which is this major break of structure, all they are now wanting to do, take out an inducement, tap a level, then they go. So this is what I'm basically anticipating. I spoke about this in the beginning of the video. So this is the inducement now on the monthly. So meaning, even on the lower time frames, once we get our confirmations for sales up there, we can even hold those sales up until they take out this inducement. After there, you can even hold up to this level. That's how powerful this methodology is. I can go on and show you all the opportunities, even from 2020 up until even this year, 2023. I can go on and on and show you that. But for the sake of time, we won't waste much time on that. Right here, you can see that they established some equal highs. After establishing those equal highs, they came and wiped those equal highs. That is what we call a liquidity sweep. That is what we call a liquidity sweep there. This movement that happened there. And that candle, it has 3 days for it to close. That monthly candle, it has 3 days for it to close. It has 3 days for it to close. It has 3 days for it to close. That monthly candle, it has 3 days for it to close. So even how it's going to close is going to be information that is going to be relevant to us, even how it's going to close. So here, you can see these are equal highs, then this one wiped, swept. So basically, we're looking at this current point, we're looking at it as a liquidity sweep based on the information that we have on the lower time frames. You can see that even here internally, if you're looking at this internal movement, they are giving you these lower lows. Right here, I'm expecting a new lower low somewhere around here before maybe a pullback, then something like this. Right? Then something like this. So I'm basically At this current point, I'm expecting something like this. This is what I'm currently expecting right now on gold, right? Even if I go down to lower time frames, the bias is still the same. The analysis and the structure is still the same that we're getting from the higher time frames, right? So even if I go down to the daily or the weekly or the 4 hour, right? Let's say the 4 hour, for example. So on the 4 hour, we need extra information. Let's see if we can get extra information on the 4 hour or on the daily. Let me start from the daily, then I go to the 4 hour. So this is the daily. On the daily, you can see that we have been establishing some swing lows in as much as this is the inducement that you saw that they haven't taken out on a on a weekly and monthly perspective, right? But obviously the inducement of the daily, they've taken it out already, right? The daily inducement, they've taken it out already. So now these legs, these lower lows, swing lower lows, this is information that is relevant to us because you can actually see that. So here you can even say, you can say that was a change of character like this, right? So here it means you're expecting a break of structure, right? Because of those swing legs only. Just looking at these swing legs that gold was establishing, meaning the highs as well, they're not supposed to be broken now. That's why you see that it came here the first time, came back there, came back here. That's why I even spoke about after this change of character here, it coming back to this high, which is this one. That was a sniper sell opportunity, this one, from May this year. From May this year, this was a sniper sell opportunity. Sniper sell opportunity from May. So even this buy, I can even show you even this buy. Because remember, after this change of character, from the understanding that we have, we can see that this was our extreme supply, right? I just want to show you even how these buys, you could have caught them. These buys, this was an automatic sell from there. This was an automatic sell. You could have just waited for the rejection there. On your lower time frames, rejection, you wait for the rejection, market to close below your zone. That was an automatic sell, right? That was an automatic sell. They failed to break this level, which was okay. Which was okay. You could have even taken your TPs because of that. Right. So this was the first from May to October. May, June, July, August, September, October. That was 5 months. 5 months. Imagine 5 months of pushing in one direction. Same thing here. They are back now. They are back to this high. They're back to this high. And remember, according to our external legs now, we're anticipating them to come and break structure down here. Meaning, that's why you see even upon this rejection, that's why I even said that was an automatic sell again. All the way from there, even as it was rejecting, you could have even started selling. You see? So right here, let me see, this was September 2022. If I go to the 4 hour, after that major change of character, because after that major change of character, that's an institutional move. After that one, you anticipate a major pullback. So in this case, where was our, let me even go to the 1 hour. Let me go to the 1 hour so that you see how much money you are leaving on the table because of a lack of understanding. How much money you are leaving on the table, how much money you are missing out on the market because of a lack of understanding that most of your so-called mentors are not giving you. Let me tell you the truth. Once you have this understanding, you don't have time to be making noise in the wherever, whether it's on social media or whatever. You don't have that time anymore. That was an inducement. They came, they broke structure down. After they broke structure down, they also came here, sort of like induced as well. But let's just take this leg because it's just the same movement. Right. That was the change of character. So right here, this change of character was the beginning of our pullback. Because the pullback of this change of character, this major change of character, this major change of character, its pullback is this major pullback that is going up, right? So it began here. You wait for the market to come back. Not only do you wait for the market to come back, you also wait for the market to collect uh, its inducement. If you go to the 4 hour, let me go to the 4 hour so that you see where the 4 hour inducement is. You will see that and realize that they actually collected the 4 hour inducement as well as the daily inducement before they even went. So according to the 4 hour, This was one leg. So meaning this was the inducement that they wanted to take out before they go up. And we had this demand. You see? All these factors are factors that we consider and we look at before we just jump into a trade. Most of you, you have now been fed things like when you see a breakout, you jump in, blah, blah, wara, 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 wara. That is incomplete information. Incomplete information that will cost you at the end of the day. It will cost you money. It will cost you because institutions themselves, they are aware of all of these methodologies that retail traders use. So here you realize that after the break, someone could have bought. Even here, someone could have also bought. We are now going up, guys. We broke out of a major trend line. We are now going up. We are now going up. Someone could have been busy, but your mentors right now, I know by this time they were buying. Busy buying, 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 buying. They were wiped. Then here they are busy selling, selling, selling. They are wiped again. So you see now. You see now. You see now. So it's something. Even here, they could have seen this as a zone, as a level. We have a level, broke the trend line. It's time to buy now. It's time to buy. They buy hard, comes, wipes them out again. Wipes all their stop losses that are below that level again. Up until the institution. So it is only your retail mentor, you and your retail mentor that are not well informed of these institutional methodologies. It's so crazy. It's so funny how people come and say institutional trading doesn't exist. It is only it is only the ignorant person who will come and say that. They can't even prove that. You can't even prove if you can't prove to if you can't prove if you can't prove to me that something how you're saying something doesn't work. If you can't come and prove to us that something doesn't work in this way, A, B, C, D, or D, E, whatever. If you can't come and prove to us that point, it means somewhere, somehow, you're talking out of your emotions or you're talking out of your, I don't know, your stupidity or your ignorance, whatever. Personally, I can even come and prove to you how trend lines are manipulated. I can show you this as a trend line, trend line. It was broken below. People were thinking the market is now selling, selling. Selling where the market kept on going up, right? This is the inconsistency of trend lines that we know it has been there. You can fight and argue about this, but this is what it is. This is what it is. It's not even a thing to argue about. It's not even a question. That's the inconsistency of trend lines that is there, right? They try to define structure, but they're not the structure, right? They are so much weak in a certain way. They have a certain weakness that they have, which most people they're not aware of, right? So if you think what I'm showing right now, it doesn't work, come again and show me how it doesn't work. The same way I'm showing you trend lines, how they are manipulated and everything, you also come and do the same. So be careful about people who just come and tell you, hey, institutional trading doesn't exist. Hey, blah, 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 blah. Be careful about those people. Be so much careful. But so this is how you could have ended this buys. Major target was there. That was the extreme supply. You would have even held it. This was in November 2022 up until March 20. Imagine months and months of holding. Same thing here, months and months of holding. So right here, this is a pullback. This is a pullback now, a pullback after they established this change there. So now, all we are now looking forward to is a push to the downside. This can be our first humble target internally. We can use this as our first internal target. Then, but our ultimate target is this one down here, right? So all you do now is go down to lower time frames. Go down to lower time frames like this, right? Let me go down to the 1 hour. Let me go down to 1 hour. This is the 1 hour time frame. It established a change of character right here to the left. Look to the left. They broke structure there. Then they changed character there. So after that change of character, I have a fair value gap right here that they left, as well as a supply zone also on that level. And also the other third confluence that I have. So we're in a bearish order flow there. We are also having a Fibonacci, 61.8 Fibonacci level. We're also having an institutional zone like that. So that's why I'm anticipating sales from there. So right here, I'm going to enter sales. Just wait for the market to tap into the zone. Once it taps into the zone, then it rejects. Then we are in. This is our first humble target there. You can even hold as far as here. Right, like this. So gold, this is my anticipation so far. If there are going to be any changes, I'm going to be updating you. But so far, this is my current anticipation, my current bias right now on gold. So guys, thank you for watching. I hope you gained some value. I'll be doing some serious videos in 2024, making sure that you don't miss, especially these major moves. Before a major move happens, I will make sure that I will do a video and make sure that you are also in the trade as well. So guys, thank you for watching. Like the video, share the video, subscribe to the channel, join my free groups in the link that is in my description there.